All right, good evening, guys. Ken at Tortoise Capital. Small group coaching cohort for December 18th, 2024. Um, it would do my heart good to hear you guys say yes. And just by following the rules today was a massively good intraday trade, which is what we should be saying. We should be saying
Amen.
that today. So let's do a quick check-in and then we'll hit our rounds. I presented a paper today on narrative cognition, which is a polite scholarly way of saying story thinking, and the methods that I've been using to incorporate that into Army leadership doctrine and practice in Army University. It's getting briefed up to Chief of Staff of the Army and the 4 stars. The paper was well received. It got a little contentious because I was briefing some hippies and uh, postmodern French apologists who, look, you don't got to apologize for everything in your life. Just because you worked hard and earned some stuff and maybe had 2 parents in the house, you don't have to apologize for your privilege and say you're not worthy and kiss the ring. Just shut up and work. You know what I mean? It's just, oh, God. Professional whiners. I just, I'll tell you who handles it pretty well is Native American scholars. They don't really, they're not looking for apologies. They're just looking for how to make the way in their world with a little bit of mutual respect. That's all. And it was refreshing to hear that from them today. Yeah. Uh, yeah. So I briefed the process model that I've been using for improving professional communication, which, in my view, starts with the internal talk and how you persuade your inner decider. Here's what I mean by that. Most of the important knowledge that we accept as knowledge, you know, the things that we decide that we believe in to some degree, the beliefs that we hold self evident, those are based on an internal dialogue where maybe your rational, optimistic mind is trying to say, oh, I think I know something. And here's my evidence for it. And then the emotional risk manager mind, the conservative, savvy dude inside says, no, wait a minute. I'm not sure, this is all new and exciting. I'm not sure I'm ready to bet the farm on this. So there's an internal dialogue that goes on. And if your internal dialogue is not persuasive, then you're going to be living in the fog of your own creation inside your own head. So the things that you need to do to become more confident in your external communication is a reflection of what you need to do internally with your communication. So for those parts of our lives where we are constructing our reality through storytelling and evaluating evidence and deciding what we are going to believe in intentionally. And at some point, we would hope that that replaces or supplements or updates whatever received wisdom we've gotten from our culture and our education and our experience and exposure to the world. Whatever programming we inherited by being a part of the cultural tribe that you were accidentally born in, you know, when you sort of wake up and smell the coffee and decide who you're going to be and what you're going to stand for and what you're about and what your mission is. Well, that's a process of acquiring knowledge that goes through a internal dialectic. My hypothesis is that the form of the internal communication with yourself is a model of what you do when you're trying to persuade others in the external world. And so if you could work on one, you're working on both. The three biggest things that give people grief for speaking in public are uh, introverted expertise. I would rather just work inside my own head in my own little space and the things that I like to work on and just be myself, just be responsible for me. I don't really want to be extroverted to be out there. And I'd rather work on the things that I'm expert with. So the introverted expert isn't is an obstacle. The preference to be an introverted expert is an obstacle to routinely getting out in public and having to speak as an extrovert on subjects where you're not an expert yet to your satisfaction. And yet you're in a position that you got to talk about stuff. That has an inhibiting effect on your ease of communication. The second one is reluctant leader, in which I would rather not be in a leadership position. I would rather just work on the things I want to work on, be responsible for myself. And yet I'm asked to take on a leadership role by members of my peer group. And I feel a social obligation to meet their needs that's in opposition to my preference, which is just to be my own person. Don't want to impose my will on those people. But you end up making a decision to act in some capacity as a leader reluctantly. So that has an inhibiting effect on how you speak in public. The last one is the anxious perfectionist, where I'm not ready to let it out until I'm absolutely certain that I've crossed every T, dotted every I, and I'm anxious and nervous and worried about what happens if somebody asks me a question I don't know, haven't already gotten the answer to the scientific method level. Well, those three things that you have to get past those to start being able to talk in public. And the things that you do to talk in public to overcome those things turn out to be the same kinds of things you need to have as part of your internal knowledge creation process. You've got to learn how to accept provisional answers, to start acting with less than 100% certainty in a risk managed way, to act on behalf of others, to be a little more outgoing. And anyway, once you get out of that discovery phase, as you discover what your inhibitors are, and you get into your next phase you move into is development, in which you're going to begin to polish the skills in order to do better in communication and knowledge creation, now that you've overcome the inhibitions. So this is just a development phase. My three roles in that one are the resilient badger who knows exactly who he is, where he's going, has thick skin to deal with interference, and the teeth and claws to do the work. And I dare you to get in my way. I dare you to try to stop me. It would make my day. It just gives me somebody to shred. And no matter what, 24/7, all season, the badger. Then there's the mindful scout who is scanning his sector all the time while we're on the journey, saying, what are the most important things to see and what don't I know yet? And what's the information that's useful, so that I can be mindful about the next things that I need to develop. So it's a continuous assessment. And then a diligent student who's going to deliberately and systematically get better each day in every way and document it and build out those skills. And then once you kind of get past the development phase, you're in the performance phase. For me, those are the Dharma warrior who's very clear about the deep mission and the intermediate objectives and is willing to take the lead and pay the price, whatever it takes. That's sort of my calling, and I'm just going to do that. And I'm all in. Skin in the game. A resourceful catalyst who's gathered skills and process and resources along the way and can facilitate the development of others while letting them retain their agency. So I can provide conditions, but not be the solution for them. That's what a catalyst has to be able to do, to cause the chemical reaction to happen and then back out of the way. And then master craftsman, so that I am approaching the work in the way a master craftsman would: care for tools, developing new tools, using them properly, clearing up the workspace, pride of work. And then all of that, those 9 little categories, those 9 roles, are each one has a persona that's a reflection of who I am. And then that journey from beginning to end simultaneously has to get the work done on the way while you're also developing skills for the next level of advancement. So you got to develop the team and develop yourself while you're also accomplishing missions to a standard, because you got to do that. You got to feed the bulldog. And for me, the 10th person is really crucial. That's the trail boss who makes sure that all of the missions are being accomplished, that we're carving out time for development and all that stuff. So that was the substance of my paper and presentation today, about how we're using that kind of story as a personal journey towards excellence that's connected to leadership and communication, but also some of these other skills that I've talked about. And why story thinking, framing that as like an epic journey with characters and setting and plot, makes it easier to organize and clarify and focus and act on that stuff. It acts as a reinforcement to your vision of what you're trying to do, which makes it easier to just get on to the next task, because it's not just because it's a thing on a checklist, but it's all part of an integrated story that you're the live participant in. So that's what we mean by story thinking. To persuade the Army to do that, I had to call it narrative cognition. That feels a little more serious. Like, no, I thought you were just talking about storytelling, but it appears you're talking about narrative cognition. Well, you are a serious person, sir. Let's go. So sometimes the names matter. So that's my check-in. Things are going well. That's all getting briefed up to the Chief of Staff of the Army, and it's going to get broadcast across all of Army University, which is cool. 200,000 students and 7,000 faculty, and I'm writing the lessons for it. Yay. So, Chin Long, how are we doing, sir? That's my check-in, and then that's my story, and I'm sticking to it. What are you up to?
Yeah, everything's good at home in Calgary. As Canadian, we get 2 months grocery food buying with no tax. Uh, the expert said that create more problem than benefit to those business.
Mm.
That's what they call the political gimmick. They just do the did it to us.
Mm.
Anyway, it's a mess.
Is
But
it 30 degrees below zero there?
oh, here? No, no, no. It's 10 - 10 Celsius degree.
Oh, that's almost spring. I guess
Yeah,
Winnipeg got hit harder.
yeah. You
It was
carry
-30 out there.
yeah. The weather is really special. Sometime at the Christmas time, we get about 0 Celsius degrees.
Yeah.
The worst month will be February. Not right now.
Mm.
February will be bad.
Yeah.
Yeah, I
Okay.
hope.
Dan, how we doing?
Well, I've been better. Uh, my wife didn't get her COVID booster, and after almost 5 years, she got it, and then I got it, and I'm still trying to climb out of it. Keep having to cancel lunches with my friends because I can't get a negative test.
Yeah. You sound a little congested, a little run down a little.
Yeah, run down is kind of how I feel. It's like every other day. I get a bit of energy, but then the next day it's kind of blah. I did manage to get all my Christmas cards in the mail, and got some more presents. And
Did you breathe all over them and lick the stamps?
no, I actually got a washcloth and
Okay, fair enough. Fair enough.
but if I may have breathed on the paper, but I don't think it's still infected after going through the mail.
Yeah.
So that's pretty much I'm not going to have a lot to report today, but I'm going to listen to you guys.
Okay. Eric, how we doing? And then maybe if you're ready, go ahead. We'll roll right into yours.
Yeah, sounds good. No, everything's good up here. We're south of Calgary, so we're in the Sun Belt. I think we have a little snow tonight, but then it is 35, 40 degrees Fahrenheit. So it's pretty mild getting through winter so far in December. So my mom is going to come and see us over the holidays. She's 89 and she wants to see snow. And I don't think it's going to happen this year. So, yeah. Anyway, yeah, no, all good. All righty, let's get going. Okay. Can you guys see that?
Yep.
Okay. So just two things today. We'll talk about okay. So last time, Ken, you asked to do a one pager on plan execute. I've got that, and I'll tell you a little bit about that process because I think it's interesting. And then we'll talk about the X holding chart that you're showing. I just got some interesting questions, I think, about that. But this part of the check-in, everything's the same, right? Nothing's really changed. Today was kind of off the charts. Everything was really moving. And I left stuff open overnight because it looks pretty great, but took a few profits, and so everything is as it has been in the last couple of weeks. So down here to PPAE. Okay, so Ken, when you asked me to do this last week, I thought, okay, I'll do it. And once I got into it, I realized I was cutting corners. I wasn't, I really wasn't following what I laid out to do, and it became evident that I got to revisit this stuff. Otherwise, you just kind of evolve into something else.
Survivorship bias.
Yeah, you're making it more than it is.
Bias.
Yeah. And then you get, great wins, and you get kind of cocky, and it's so this actually for me was a very timely exercise. So I thank you for that. So let's just go through it. So plan is pretty easy for what I do. Market conditions, get up, read the daily report, look at risk Z, market context or context. The symbols, since I have a set group of symbols, I don't really have to identify other than I have to see which ones are in critical state, which are in a pattern that you can trade during the day. But it's 30-minute charts. So, you're an hour and a half, or 3 bars, 4 bars out for a new formation. So, that's fine. Prepare, I think that's, where you really kind of get into it. So from the symbols that I've kind of identified that are in the zone for that day, 30-minute chart, frog box. I throw in a range stat and an OR 30 on the chart just so that throughout the day, I can kind of monitor, relation to opening and in relation to a range stat for the day. And what we've discovered, 3-4 weeks ago, is that morning gaps are going to happen. I've got the strategy, just do a turbo strategy, figure out what symbol. And I tell you, that works really slick. It gives you a lot of confidence because if you wake up and you have a sip of coffee and, oh my God, morning gaps, it's like, well, okay, here we go.
Run the
game
program.
on, right?
Yep.
Game on. Money management, 6 positions is kind of where I stick to now.
Yep.
And that's a good span of control, right?
I think 30 minutes makes that easier to manage. That can be a little tough on 10-minute and 3-minute sometimes, but 6 open with 30s should be all right.
Yeah. And then, how the day trades. You maybe get activity in the morning, you're an hour and a half in, you go through lunch and it kind of, flat lines a little bit. And then, end of the day, you look for VWAPs or, close out or move on. So 6, it's not, not crazy. If I got a turbo going though, then maybe this changes, maybe I have to lighten up because the turbo, you got to really kind of stay on top of that so you don't,
Yeah.
lose it.
That
Right?
probably takes up 3 of your attention slots.
Yeah,
Like if you
right.
were doing 2 turbos, that's probably
Yeah.
all you ought to be doing.
Oh, yeah, yeah. You just get, yeah.
Yeah.
Well, so maybe 10 years ago I could have done it, but not now.
I'm pacing myself, sir.
I'm pacing. I'm pacing myself. And this mental readiness, we talked about this. So one of the problems I had was during a trading day, I would get into creative mode and try to maybe overthink or figure out how else could we do this during a training session, which
Yeah.
is a disaster. So, okay, mental readiness, trading room, only sniper, hunter, and coach. That's it.
Yeah,
Nobody
I would
else
just
comes
say
in.
I would reinforce, have a process for what to do when those interruptions come, such as a separate notebook just filled with observations and off the wall comments and just as they occur to you, just as a source
Okay.
of, hey, this is where the spontaneous thoughts go. I got them. It came into my
Yeah.
head. I'm going to take it out of my head and put it on that paper. And I'm going to look at that when it's time to look at that.
Yeah.
So that you end up respecting whatever that signal generator is that's producing aha moments. I consider that to be my internal monkey and my 12-year-old self mucking around. And they say, hey, look what we found, something shiny. Okay, noted. That's what you're supposed to do. If I listen to it and record it and get to it later, then they're satisfied that I listened and they'll let me go back to work. But if I don't do that, then it just starts. I look for ways while I'm trading to start thinking about other things, and I start drifting. I don't like that. So I found having a place to put it and then to do something with it genuinely is an important way to respect the internal mechanism there.
Yeah. Okay. And then execute. Pretty straightforward. Once I've trade framed and
Yep.
have the signals or I have the patterns, and they're all in the charts. Exits, skin and drag and PSR flip. And the one that I still, maybe work on is risk management. 1 hour profit. Get no lose dinner +2, so you don't give it all back.
Yep.
My tendency is to let the PSR flip because I found that it's amazing how you get that little wiggle in there. And
Yeah,
going,
and sometimes the price will hit it, but not the RL10.
Yeah, exactly. And then, but you don't. I guess you don't know that until you have skin in the game and you have to make that decision.
Yeah.
Then it's like, okay. But my preference is let that PSR run because I've just been amazed at how much farther, you get if you just be patient, let the PSR run, let the RL, do what it's going to do. And then patterns and techniques, it's just standard patterns, nothing fancy there.
Yeah.
And then assessment, this is probably for me work in progress. It's something I haven't done a lot, but I've realized it's really important. Self, end of the day, okay, tell me where was the level, what worked, what didn't work, follow the rules. Market, okay, was it good market, bad market, whatever. And then system performance, I think I've gotten a lot better on that. Document, all the trades, per trade, daily, weekly, and then mark up the charts and then look at them and say, oh, did I miss something or did something change or is there maybe a new way to interpret what happened, during the day?
Yeah. Your next stop on this journey is you get the list of all these things that you say you're going to do. And then Monday, Tuesday, Wednesday, Thursday, Friday. Each one of those is a red dot or a green dot when you do your after action review. It's like, hey, today I did that one and I did this one, but I didn't do the third one.
Yeah.
Or that should be red. And then you just simply you just fill out each day And then what you'll notice is if you have if you're having difficulty with a task, it's going to look like this. You're going to have a horizontal error. Day in, day out, I'm having trouble doing that thing. I'm taking shortcuts. I'm not doing it in time. I forgot to do it until it's too late. That's the so there's something in the way we've designed how to do that that's making it hard to do. So we have to improve the way we routinely do that. But then there may be times like, hey, Wednesday was just a bad day, and you're going to end up getting this vertical kind of error pattern. And that was, hey, there was something about the environmental conditions on Wednesday that just maybe I didn't get enough sleep. I was double booked. I was letting work intrude. I didn't protect my environment. I was whatever, bad mood. I let yesterday's results make me too emotional. So I was just I'm pissed or whatever. So the things that you do to protect or to fix that kind of a day, that kind of an error pattern is different than the ones where you have it's just a task that's reliably hard to do. Right. So well, now that you have these standards, that becomes your contract with yourself. You say, and then just you set that up in a little spreadsheet, and then over the course of a month, you do something like, hey, here's my 4 or 5 weeks, Monday through Friday, and then down here there might be some things that you decide to do once a week. At the end of the week, I'm gonna convert all the the daily trade summaries to a weekly summary and update my chart. I'm going to take a look at sustains and improves and action steps from my AAR. Whatever you need to do. I'm going to rebalance my accounts. I'm going to update my trade journal. So there may be some once a week tasks, and so you got 4 columns on that one. And you just score that. And maybe there's something you do twice a month, and then maybe there's things that you do once a month. So on one sheet, you should be able to have all the routine things that you've decided to commit to. Now, on the positive side, when you are green across the board with hardly any red ever, but not perfect, but clearly you got that system under control. That's where you can start saying, all right, now that this has become automatic, are there new things that I want to add to this list that are going to be part of my better process going forward? And it's better to do that in a deliberate way with the most important things to add rather than trying to do grand transformations. Once you get a process and it's going, you kind of want to get that going and discovered, did my first thought of defining the system, was that really good enough? Am I doing those things? Are there other things that I'm doing that are not on my checklist? And those are kinds of things that you end up adding later if they add value. But that's sort of a cyclic way to systematically get better, and you get positive reinforcement by seeing your green dots and turning red to green. And you want to make sure that this is just like one page and easy to do. Like I use colored pencils or a freaking dry or a erasable gel pens because I like the physical, scribing of it. And that has been a reliable way for me for 30 years to improve the performance of my staff and of myself. But it's got to be kind of one page. And that'll force you to do to really focus on the most important things. It's better to work harder on the most important things than to add 5 or 7 pages of trivia. That then becomes the task. Oh God. So keeping it to one page is kind of crucial. Okay, keep going.
All right. Yeah. So this was what I did, and like I say, I as I'm going through it, I'm just really starting to learn that hey, I really was not focusing. I was getting sloppy, and I mean, it was a good wake up call for me. So
Well, it's good that you learn that while you're on the positive side of the slope.
yeah. Okay. So this is that new chart you're putting in your report, Ken.
Yeah.
And I saw this, I think, on what, cohort 2. And so I just marked this up. I think this is from today. And I'm just trying to understand, what I can get out of this. So number one, it's just, SPY and over 1 and 5 and 10-year hold or 10-day holds. It looks like nothing's going on, that, 50% of the market goes nowhere over the next 10 days because there's no, percentage increase.
Let's see. Let's see if I let me see if I agree with that. So this was yesterday's closed.
Well, yesterday or today's, I can't
I
remember.
can't. Well, I could just say, yeah, today was not a minus 0.4 day. That's for sure.
No, no.
Yeah. So this one here, we'll start at the bottom. As
Okay.
at the close yesterday, it was up 3.5% compared to 40 days ago. Okay.
Okay.
And compared to 20 days ago, it was up 2.7, was up 0.1 compared to 10 days ago, and so forth. Now, when you compare that score against the last 10 years of 40-day holdings, that's what we're going to compare it to. Where does that current 40-day performance fit inside the last 10 years of 40-day holding periods, right? So there's 260 trading days in a year.
Right. Yeah.
So there's 2,600 trading days in the last 10 years. So if I go back 2,600 days and then look at and then compute from 2,600 to 2,561, that's a 40-day holding period. So I compute the score. How much did it gain from day minus 2,600 to day minus 2,561? Check or hold?
Yeah. Check.
Okay. So that goes into a stack. And then I march that forward one day. That's a 40-day holding period. So there's about 2,561 40-day holding periods. Okay. Is that clear?
Yeah. Clear.
Oh, okay. Now, the average of all of those 2,561 40-day holding periods is 2.2%.
Okay. Got it.
And the standard deviation of those is plus or minus, call it 6%.
Okay.
So the range of normal and I managed to hide all that shit. So the average is 2.2 plus 1 standard deviation is 8.1%, and then minus 1 standard deviation is minus 3.7. So that's the range of normal for the S&P over a given 40-day holding period. Okay.
Okay.
The best 40-day holding period in the last 10 years was plus 31%, and the worst was minus 32.2%. When I compute the z-score of that, the 31%, the z-score was 4.9, and the negative z-score was approximately minus 6. So that's the same thing I'm doing now with all the 20-day, 10-day, 5-day, and 1-day holding periods. So what I'm really interested in is knowing, all right, here is today's performance on those 5 holding periods. And this is the z-score of that performance. So those are what this is telling you is that the 40 days at 0.2, the 20 days at 0.4, the other ones are close. They're all less than half a standard deviation away from the average. The last 40 days and all the little components have been absolutely unremarkable.
Yeah, right.
Not,
Yeah.
this is not
Yeah.
a special. Now, it just so happens that we're at all-time highs. But for the S&P, this has not been an outrageous, asymptotic, cataclysmic gain over the last 40 days. This has been
Right.
this has been a just part of a normal grind going on here. And the same thing for all of the other ones. Now, the thing that's important to note on this, is to compare the minimum, the minimum scores, the worst performances. The worst 40-day performance was minus 32.2. The worst 20-day performance was minus 31.4. That should just make you stand up and say, what?
Well, yeah, what?
Yeah. Yeah. And the worst 10-day performance was
10,
minus
yeah.
23%.
Or 23. Yeah.
And the worst 5-day performance was minus 18, which is more than half of the worst 40-day performance. So what that tells you is, and look at the worst 1-day performance was damn near 11%, which was 1/3 of the 40-day performance. So what that tells you is, you can be cruising along like this, making some money or whatever, and then all of a sudden, bam, bam, bam.
Bam. Yeah.
And 5 days later, you've lost half or more than half of the worst 40-day performances in the last 10 years.
Yeah.
Which included the financial crisis of 2018. Well, the upside is kind of the same thing. So what this tells you is that the market routinely is not normally distributed. Get my pen working here. Draw with the mouse. So the market return, if that's the normal distribution, the actual market distribution looks like really fat tails and then a very tight cluster around average and then fat tails that keep going. It's like they pushed in here and it went blip. So you spend a lot of time in a really tightly compressed range. And then periodically you get these fat tails that do not stop. And they are abnormally probable, which means that you get to see these unusual sell-offs much more frequently than would be predicted by a natural, normal, independent process. Like today was a 1 day, and today was like minus 3% the S&P in the last 90 minutes or something like that. And that's only 1/3 of the worst day in the last 10 years. So as much as that is going to get everybody's attention, that was nothing.
Yeah, it's nothing.
It was it was probably a double range stat day, maybe even might have been triple, but this is where the complacency can occur because you spend so long in relatively tightly compressed grinding markets. Oops. And then some extraordinary thing happens, and which gets our attention. So that's one of the things that is important to see from this chart. Now, so I look at this and just say, how extreme have the recent moves been? on it in terms of volatility. How volatile have they been? This so in the sniper trading mentality, there are two things that are noteworthy. One of them is volatility, and the other is location. So, if this was a 30-day trading range, or I'll call it 40, I use in the sniper, I use 5, 30, and 150. Just because, because you need 30 to get the beginnings of normal statistical description, and that's like 6 weeks. Actually, I'm sorry. I use 10 for location. I use 5 for volatility. Yeah. So this is times 3, gets you 30, and then 150 days is like 35-day weeks. So it's like 30 and 30. Only this is days, so that's going to be weeks. That's how I get those 3 numbers. So 2 things make it more likely to have a bigger move tomorrow. What the volatility is. So there was nothing in yesterday's volatility that would suggest that today was prepared to be more volatile from the volatility performance. If anything, what's made it volatile was today is a Fed day. Well, what that really means is that as the last 1 to 5 days approaching the Fed, you're getting micro moves in the S&P because your Z scores are so close to 0. It is remarkable for its lack of volatility, actually. And then the other thing is location. Now, what made the S&P interesting is that for about the past 5 or 9 days, it's been hovering right near the top of its 30-day and 150-day trading range. Hasn't really been able to break out significantly, but it's hovering up in there. What an abnormal location means is it's in the top 10% or bottom 10% of that look back period. Because if I can use 10% of that trading range as something like a risk box, and it starts failing this way, then I've got, if that's the 50-yard line, I've got 3 of those boxes just to get back to the middle of the trading range because of math. And the same thing on the bottom. If it was in the bottom 10% and then did not fail, but starts to reverse, well, if I can use the size of that 10% as my risk box, I'm going to have a 3-to-1 trade just back to the middle of the trading range. The idea of the sniper fence sitter is that if it's right on the 50-yard line or an index value of 0.5, there's 3 moves to the upside and 3 to the downside before it becomes extreme based on location. If you get volatility and location, tomorrow is a much greater chance of being a compound critical state. That's what we have today because we made a new 30-day low, a 10-day low. We gave back a lot on the 150. It's not in an extreme on the 150, but the fact that the 10-day and the 30-day lows got blown out and the size of the 1-day move was off the chart big, well, tomorrow is a much greater day to be a large range move than a normal random day. So we're going to be especially well prepared to trade tomorrow, and in particular, would not be surprised to see a gap. Why? Well, because this thing closed like a anvil falling out of a window with just a tiny little recovery. So the evening move is all the international traders and the futures traders trying to process the news and the number, the size of that move. Are they going to take it up or down? If they take it way up, then tomorrow there'll be a big gap up. So if I bracket tomorrow's big gap move and I don't have a directional bias, I just expect that there's going to be a big move right out the gate. In fact, no matter where it opens, I expect there's going to be a big move right out the gate because there's a bunch of people that came home and opened up their, she said, holy what? Like all the guys that were buying DIA on the fact that it was down 9 days in a row.
Yeah, exactly.
Got to go up. Oops, not so much. So tomorrow is different mentally than today was at the start. Today was just a normal day until the Fed. Tomorrow is not going to be a normal day. It's going to start with a gap, and then it's going to. We need to be ready to invoke the gap trading plan, which could be bracket the open and then hang on for dear life, or just wait and see what that first 30-minute move looks like, and then wait for a reversal. Because if it closed here and it gaps down to here and then sells off immediately and reverses, and you get a PSAR flip, I say, okay, now I can put this on. If that fails, then I think the size of this move from the open to the low of the day is the likely size of the move on a failed SSC. But if it works, the first price level is getting back to the open. And then if that doesn't stop, then it's going to close the gap. And so now I can take my little R10 or my R5 or my frog box, and I can start calibrating the size of those moves. And I can be the only calm, measured trader in the middle of a Black Friday run at Walmart, with the masses trying to get the widescreen TV. I can be the calmest guy in the room, just trading my structured plan. That's who I want to be tomorrow. Yeah. So I say all that simply to say what the value of this little chart right here is it gives you deep insight into the current market condition on the basis of volatility. Really important. You should be able from the other charts just to see where it is on trade location compared to the 10 and the 30-day highs and lows. For most swing trading, that's about all you need. Sometimes the 150 is useful. Like it's been useful to know that it's pushing all-time highs. That's good. But really for swing trading, one day at a time, the 10 where it is with respect to the 10-day and the 30-day is probably enough. Right. Yeah. Now the rest of this chart reads the same way. And so what I do with that is I now have all these asset classes. I can look at S&P, NASDAQ. Let's see what that I can't. DIA, mid caps, small caps. So that's my 5 US biggies. I have EFA as the comparison to the S&P 500 for the rest of the world. That's the Euro Asia 350. Then I have my XL series, energy, or is that finance? Finance, energy, or no, I'm sorry, tech, energy, finance, industrials. Those are the 4 XL sector spiders that I think are tradable. Then I got my story stocks, Tesla, Nvidia, Palantir, Cliff, Devon, International Paper, Alcoa. It keeps putting my name on there when I'm drawing and it hides it. So marijuana, I can't read that one because my name's in the way. There's Intel, Advanced Micro, and that's regional banks. So that gives me sort of my default, dirty dozen story stocks and indexes. And I can now I can look at all the 40 days going across, the 20s, the 10s, and the fives. And all I'm really looking for is the Z scores. Like all the US Z scores were in the red. Well, oh, here's one that was these were in the white. Like this one was really crazy. It's a 2.3. Oh, Tesla. That
Yeah,
tells
Tesla.
you just how crazy Tesla has been compared to the rest of the markets as choices. So just by a rapid inspection, by looking at the Z scores, I can see who has the relative juice, and are there any that are greater than absolute value of one Z score? Because now it's extraordinary. So really, when I take a look at the Z score stack, average is always going to be 0, and then the standard deviation plus or minus one Z score.
Mhm.
2/3 of the time, it's between 1 and -1, so about a third and a third. And only 1/6 of the time is it larger than 1 or smaller than -1. So anything that's outside of that plus or minus 1 window is now the abnormal condition statistically that makes it interesting. And if it was bad, then what that means is it could be a big move just back to average, the reversion to the mean trade, or whatever the size of the move was that made it get that bad, maybe there's another one of that size waiting. So when it's outside plus or minus 1, then this is double interesting because now that's a compound critical state ready to break large. And the same thing on the upside. On the upside, now I don't think of these things as symmetrical because the failure was much more likely to be fear-based than calibrated greed, right? So yeah, this thing is in a critical state. It could continue or it could revert back to the mean. But I just always think that the fear move is the one that has the more reliable over emotionality to it. And I'm much more preferring to trade things that just got slaughtered than the things that have been outrageously good. Like tonight, I would be looking for the things that had the worst Z-score performance on 1 days and 5 days, because that's going to be the one that is suffering the most, and that's going to be the one that is most likely to trigger more selling or is going to attract all of the values hunters looking to buy on a dip. So I'll be concentrating on who are the big losers out of my personal stack.
Yeah. So last question. What about NVIDIA?
Let's see where NVIDIA is.
It's negative all the way up.
Yeah, it's had a bad. It has not had a good. It had a nice earnings announcement and a nice run, but it's $3.1 trillion, and it's just you. It's not like UMAC or something. It takes a boatload of money to make that thing move, and so that's just the reality of that great big sluggish beast. It's still a long-term play, but I think the cat's out of the bag. NVIDIA is an amazing company. Got it.
Right.
Noted.
Yeah.
It's like Broadcom, which is I think AVGO, is probably the next candidate for an amazing chip company that could benefit from AI, because they're getting into the AI chip GPU making business and chip making business now. But they just went over $1 trillion. So they're only 1/3 of the size of the market cap of Nvidia. So and they were up like 20% 2 days ago.
Yeah.
So as people sort of said, "Oh my God, Broadcom, where have you been all my life?" Maybe and
Yeah.
Nvidia is just slowing down. Maybe it's time to roll over. So that's what I think happened with Broadcom. So it's going to be in my second tier of story stocks, if you will. My primary story stocks remain Tesla, Nvidia, Palantir, and then UMAC as a fun and games, which was the only thing on my stack that was in the green today. It's nice. So not a total loss. So that's how sort of like performance at a glance based purely on statistic. And that is so information dense. You'd have to look at what, like 15 charts times 4 different time frames and somehow try to integrate that in your head to see what their relative scores and performances are against themselves and against the other competitors. There's no way that the human brain could look at that many charts and come to the same efficient conclusions about who's really winning and losing, who's in an extreme condition and who is not. There's no way that you could do that just by looking at charts. This is the thing that lets me go look at a chart. There's a reason to go look at that chart. Like there was a reason yesterday to go look at Tesla. And then